morning, everybody. Today is March 12th, 2020. Happy Thursday to short sellers, because you were right again. The Dow Jones is down currently around 2,000 points. It was down by like 2,200 this morning when the trading was halted because of the breakers that I implemented on the New York Stock Exchange, and kind of like basically hold the trading so investors could cool down and, you know, get some kind of sense out of the situation and maybe readjust their trades. So, but there's another blow to the stock market besides the coronavirus, and this blow comes from the actually oil wars that are happening between Russia and Saudi Arabia. Just a quick prehistory for this thing. Because coronavirus is being spread by traveling people from areas that are infected with coronavirus to areas that are not infected by coronavirus, obviously the travel went down like crazy. Nobody wants to fly, nobody wants to stay in a plane in a closed airspace with somebody who is maybe sick, and obviously nobody wants to get in touch with a lot of physically in touch with a lot of people on any kind of big conferences or gatherings, and or some kind of exhibits. So business canceled all these huge gatherings for the next couple of months, and they actually been thinking about canceling the Olympics. So that impacted the travel like never before. Airplanes, if they're flying empty, and Donald Trump just said that Europeans are not allowed to enter America. So that's a huge traffic blow to the travel industry. So, but the consequences of this huge decrease in travel demand is the huge decrease in demand for oil, because, you know, if nobody's traveling, who needs oil for airplanes, for I don't know, cars and other types of transportation. So obviously the oil demand went down and the oil prices started to go down. So Saudi Arabia and Russia, what they call it, OPEC plus, which is the collection of countries that produce oil, and they all gathered together last week and they said, hey, you know, let's try to cut the production by 1 to 2 million barrels per day, and basically, since Russia is not member of OPEC, they asked Russia to cut down by 600,000 barrels of oil per day, and you know, the rest of the cut would come from Saudi Arabia. But obviously Mr. Putin said, no, we need our money, we need to produce oil, blah blah blah. So the bottom line is that the negotiations failed, and Saudi Arabia, I guess, went kind of emotional and said, okay, if you don't want to negotiate with us, if you don't want peace, let's go to war. And by war, they basically said, look, we're gonna flood we're gonna drown the market in our oil. So just this so after this whole thing broke, they said, we're gonna pump, instead of cut the production, we're gonna pump the production of oil by another 2 million barrels per day. That will create a huge surplus of oil, and obviously it will bring the prices from like $45 or $50 per gallon to like $30 per gallon, potentially to $20 per gallon. So Russia exports 10 million gallons per day, so multiply by $30, and we're talking about $300 million are flowing less to Russia every day since this war started. But there is a a new blow that Saudi Arabia just announced in this war against Russia, they said, look, we will supply the whole Europe with oil at unprecedented, in the recent, let's say, 10 years price of $25 per gallon versus the market price of $30 to $32 per gallon. So, I'm not sure if you know, but Russia is one of the major suppliers of oil to Europe. So obviously Europe is going to immediately switch to Saudi Arabia oil because they're asking to sign long-term contract at $25 per gallon, per barrel. So, which basically kind of cuts out Russia out of the European market, and that's probably a loss of at least 2 or 3 million barrels of oil exported to Europe, and multiply 20 million by 30, and you are talking about 20 by 30, $600 million or something like that. I mean, the numbers are huge, but the point is that Saudi Arabia also is competing with American oil producers, and the problem for American oil producers is that America produces oil from shale, which is with a cost around of $40 per barrel. So the cost of production of American oil is kind of high. So if oil is trading for $25 per barrel when it costs $40 to extract it through fracking and standard ways, the problem is that the oil companies are not profitable anymore, and in fact they're losing money, and it's better for them to stop versus to continue to suffer losses. And that, by the way, will reduce the supply of oil coming to the market, so maybe that's kind of is going to stabilize the market and the oil prices on its own. So, but the main thing is that this oil wars are creating a crushing blow to the stock market, because oil companies have huge capitalizations, and they do have pretty good business model and huge revenues. But now these revenues are evaporating because Saudi Arabia is going full force on oil prices reduction. So if you want to play this market, you should buy inverse ETFs that short the market, or buy put options on blue chip stocks. If you want to know which inverse ETFs to buy, please go to the website foretf.com. It will take you directly to the Apple App Store, where you could download, install, and run my app on your iPhone, iPad, and Apple TV. And it covers 2,200 ETFs with daily buy and sell recommendations. So get the app, find inverse or short ETF group, and buy from there. Thank you for your time. Stay healthy, stay away from coronavirus, and good luck trading.